We start with Craig Bolanos, the co-founder and wealth advisor at VestGen Wealth Partners. We're probably going to get interrupted here, but let's get started. Craig, how are you today?
I am absolutely fantastic. And big news today, right? We had inflation data, we had GDP, and we had the long-awaited ruling from the Supreme Court on tariffs.
Are you surprised that the markets have been down a little, up a little? Now, it was up a little, down a little, now up a little, but not a lot of movement either way.
No, not a lot of movement either way, because I think this was long expected. People didn't know if the actual vote was going to be 6-3 or some other combination thereof. But the reality is the market is going to say to itself, this ruling from SCOTUS shifts us from executive-driven decisions that are fast and can be unpredictable to congressional-driven decisions that are slow, methodical, and negotiated. And guess which one markets prefer longer term, John? Slow and methodical.
Do you think that then the administration, the federal government, is going to have to refund the billions of dollars they've collected?
Well, that's the big question. Oh, you want to know if you're going to get your Trump dividend, or you want to know if your local retailer is going to get a check in the mail.
Well, if I was a business person, I would wonder about that.
Well, of course, there's people rubbing their hands together waiting to have direct deposits made back into their bank accounts. I think that stuff is going to take a long time to sort out. But this has got a whole bunch of implications for the bond market, implications for the stock market, various sectors. But I think a lot of this was priced in because, again, the market's forward-looking, and this wasn't exactly, it's newsworthy, but it wasn't news-shattering.
What else are you looking at today? What other numbers jump out at you?
Well, I mean, I got up out of bed, got to the office, and I said, wait a second. I thought the economy was doing better than the awful GDP number we had for the fourth quarter. And then as I was digging through some of the data, I had to pinch myself and remind myself that, wait, we just endured the single longest government shutdown in the fourth quarter, some 43 days. So I probably shouldn't be surprised the GDP data was pretty abysmal. I think if you were to back out that government shutdown, we would have been more on pace. So what does GDP mean to everyone listening? I think right now the economy in the U.S. is not deteriorating. This is just more proof in the pudding that the economy is moderating.
You think the Fed then is probably going to stand pat, right?
Well, I think the inflation data, personal consumption expenditure, which is the Fed's preferred method of inflation, basically what are they saying? They're saying, hey, this inflation is sticky. This inflation remains entrenched. There's no way we're getting any rate cuts at the March meeting, but I still think before the year is done, we'll get at least 2 reductions. But those reductions will be really based on the fact that the labor market jobs are going to continue to weaken.
Nothing in all of this reporting, though, today changes any of your investment outlooks, right?
No, I mean, we still have our 6 outlooks for 2026, and I believe they're all intact, regardless of the SCOTUS decision, regardless of GDP, regardless of inflation. I just encourage everybody, whenever I get to come on your show, John, which is such a treat, to buckle their seatbelt. I think we can have a 4-peat. That's a 4th decent year in markets, but this is going to be much more volatile than the previous 3.
You referenced 6 outlooks. What was that?
Oh, I called it 6 for 26. If you want, I can certainly share them.
Give me a couple.
I'll give you a couple. I think number 1, people need to be more active. I didn't mean trade, but people need to be a little bit more active with their portfolio in 2026 amongst the volatility that's going to be here. I think there's going to be several pops and several drops, and people should use those as opportunities to rebalance. Number 2, I can't say it enough. Go global, go global, go global. I believe this is going to be the second year. It's going to be back-to-back years that international investments probably outperform the U.S. And then above and beyond that, I think people just need to recognize that returns are going to come back to normal. When valuations are high, it's tough for stock market multiples to expand, which means we're very earnings dependent. So the idea that there's going to be a third gigantic double-digit increase in the S&P 500 would be really tough to do.
Craig, what else do you want to talk about? I think the news story today will continue to be about tariffs, but is there anything else that we should make sure we get to?
Well, there's going to be the big press conference on the tariffs, and I can't wait to see the State of the Union. That's the real one on how we're going to address the tariffs. But, I think the big thing that's out there, John, is there are more and more studies coming out that people who retired 5 or 6 years ago, John, are actually being forced to go back to work. And whether that's affordability, I think it's a confluence of so many things. And we've got this existential retirement crisis in America. And that's something that I think we should just talk more about, because people need to save and invest, grow and protect, and they need to have a strategy. And remember that inflation is the silent killer in retirement. Economies, bull, bear markets, they're going to come and go.
Hold on a second, Craig. We'll ask the newsroom to continue to monitor the president's remarks. I've been talking with Craig Bolanos. And Craig, just one thing that I think the president alluded to there, and it's kind of where I thought this story ultimately has to go now, is to the Congress. The Congress can impose tariffs. They have the power of the purse. The president did at least briefly allude to that, despite his grievances. That's really where it would go next. Do I understand that correctly?
That's exactly right. This gets kicked down to where it does belong, which is the power of taxation belongs solely with Congress. I think it's going to be a tough sell because last time I checked, I think the Republicans have a very slim 3-seat majority in the House, and there are Republicans that have broken with the president on this. But I think this is good news because it really slows down large changes that could potentially happen. And for markets, that's a positive.
You always say that what markets like is don't like is uncertainty. They like consistency. So at least now we have a roadmap for where it's going to go. And this could not have been a surprise to even the administration. The president may be angry. He's right now reminding people that he stopped 8 wars, and he called members of the Supreme Court fools, lapdogs, unpatriotic, unloyal to the Constitution, easily swayed and afraid. But they can't be surprised by this ruling, right?
No, I don't think they're surprised. It's long been talked about. It's been acknowledged by people in the administration that this might be a very, very likely outcome. It doesn't mean all of the tariffs go away, just some of the tariffs go away. And I think at the end of the day, this is why America attracts capital from all across the globe, because we have a system of checks and balances that near term sometimes are called into question, longer term remain true and just due to the founding members that created this great nation.
Craig Bolanos is the co-founder and wealth advisor at VestGen Wealth Partners. Next time we talk, finish that 6 for 26 plan that you had. I thought that was interesting and helpful too, Craig.
My pleasure, John.
GetRetiredStayRetired.com is his website. This is the Noon Business Lunch on WGN Radio.